Hello, Jim Adams here. Would you like to earn some extra income every month? Well, today I'm going to share with you how I've done that. I'm going to share with you how I sell covered calls and try to keep it as simple as possible. So, glad you joined me today, and let's go ahead and get started. Just want to remind everyone that I'm not a professional. I'm not a certified financial planner. This is something I enjoy doing, a way to make passive income. So, that being said, let me give you a little bit of history on myself. Let's go ahead and go to the next screen and let me talk about how I got started. About 10 years ago, it may actually be a little more than 10 years, I decided I wanted to make some extra income, and I had some stocks that I had inherited that had a really low cost basis, and I didn't want to just sell them. I wanted to find a way I can use them and make some extra income. So what I decided to do, I heard through, I believe it was probably a YouTube video at that time, or maybe it was an article or a book I saw in the library, that I wanted to try to sell a covered call. And so I gave it a try, and I started real slow. I did one contract at a time. As I got more confident with it, I did more contracts, meaning each contract, an option contract, represents 100 shares. So if I did two or three contracts, that would be two to 300 shares. And I was okay with it because how I would look at it is I would say, well, Coke is at 50, and it was primarily Coke that I'm talking about at that time. So if Coke's at 50 and I could get 60 in a year, well, then I would sell a contract on it and earn that premium. And if it got assigned, I was okay with selling Coke at $60. So that's kind of how I got started. I did some research, but to me it was very confusing. So I did some research. I didn't do a whole lot of research, but I just started small and just sold a couple of contracts now and again, and I increased over time. But I never really did a whole lot of deep research. So about, I guess, 10 months ago, I had a bunch get assigned, and that's when I started to really get on this journey I am now to really learn how to sell stock options and to make some really good passive income. So in that time period, I went ahead and made some changes. And what I'm going to share with you today is, what I'm doing and how to get started yourself if you want to get started and try this. So, and then at the end of the video, I'm going to actually give you an example of some trades that I've just did last week. So, and also want to mention what a covered call is. I think it can be a little confusing. A lot of people hear these stories of how risky and crazy option trading is, but I only sell options and I keep it real simple and relatively safe. So an option contract again covers 100 shares, and you're selling the opportunity for someone else to buy your shares. So in the instance I've mentioned before, I'm giving someone the option to buy my shares at say $60 a year from now, and they'll pay me a premium. It could be $100, $200. I try to typically per trade get around $200. I started out trying to get $100, but now I'm getting closer to $200. So when you sell that, you pick what's called a strike price. So my strike price would be $60, and you pick an expiration date, and the expiration date may be a year out. So the expiration date would be that day a year from now. And what's real interesting that I found out is most options will, if they're going to be assigned, it's usually right on the day of the expiration. There are occasions where it will be assigned before, and I found out that the hard way, that if there's a dividend date or an ex-dividend date, sometimes people will go ahead and assign at that point to be able to get the dividend. But that's doesn't happen that often. You're pretty safe to assume that your options aren't going to be assigned until pretty close to expiration. Now, I don't typically wait to expiration. I usually will manage the option before that. So that being said, let's move on to the next page. So to get started, again, I would do one contract. I'd choose an existing stock that you already own, or it can be an ETF. I also sell options on DVY, which is a dividend paying ETF. So it owns a lot of these same stocks like Coca Cola and Intel, and IBM and Walmart and some of those companies. So pick something you already own. It could be Coke, it could be Intel. These are some of the ones I've sold recently. And again, just start with one covered call. So if you have 100 shares, if you don't have 100 shares, say you have 80, you'll have to buy an additional 20 shares to get to that 100 shares. And then once you have that 100 shares, go ahead and look at some options that are out there. I like to use safe option guidelines. So I like to look at 30 to 60 days out. I like to do something along a 10% return, meaning if I'll use the same example with Coca Cola, but if Coke's at 50, if I'm going to be looking to trade it for between the next 30 and 60 days, I would try to get 10% return on it, meaning try to get a strike price around 55 if it's trading at 50. And then delta relates to the probability of the stock price being in the money, or meaning the strike price in the sense of a covered call would be more than what the strike price says. So if the strike price is at 55 and the price of the stock goes up to 57 and I don't do anything, it would be assigned. So, but you can do things, and that's another major piece that I found out with working with options, is you can actually manage the trades. You don't have to always let them expire. You can close them by buying them back and paying a little bit of premium, or you can roll them out into the future. So let me actually now show you a few of the trades that I have done recently. So this is my trading spreadsheet that I use, and you can see, don't worry about the put spread. That's something that'll be in a later lesson that I'll discuss. It's another safe option strategy, but for now I want to mention these covered calls, trade 2 and 3. So I sold a covered call, and actually for Coke I did one that's way out. It's almost 2 years out, and that's what's called a leap, meaning you're going much farther out into the future, but you can get more premium for that. And I did the leap for a $70 strike. So if I can get $70 January 20th, 2023, then I'm willing to actually sell Coke at that point. But being that I have a lot of shares of Coca Cola, I'm willing to do a couple of these, usually two every month of these leaps. And then I have leaps as you get closer, they become short term, and you can manage them and you can close them and roll them and do all the same things you can do with short term. So, but this could also be a 30 or 60 days contract, which I do have one I think expires in July. And I earn not as much premium. I think I earned more like 55 cents per premium. But here you can see I earned $1.15 for two contracts. So here you got $1.15, the two contracts. So that's $230. Again, you multiply it by 100. So $1.15 is 115, and then you multiply it by 2, it's 230. And luckily the commissions at Schwab are relatively inexpensive. Here you can see the cost. It's $1.30 total is what I paid to make the trade with Schwab. And then you can see the final premium was 228.70. So, and I literally did this in like 10 minutes. So I made $228 in 10 minutes, which, I mean, can you imagine if you were doing something else, driving for Uber or one of the other companies, and to make $228, you probably would have to maybe work 2 or 3 days. Definitely at least a whole day, but I spent maybe 10 minutes. Overall, I'm spending 2 or 3 hours a week making these kind of trades. And you can see here I also did an Intel trade, and this one was a little shorter term. So it's 723. It's within the 60 days status, and I made it on the 4th of last week. And here you can see the delta. So it was a 0.2002 delta, which is right around that 80% probability that it will expire outside the money. And the current price is 56, and I did a strike price of 64. Again, the 10% that I'm trying to that I'd like to earn if it actually gets assigned, which isn't bad. a 10% return in 2 months, I'd be happy with, in a lot of cases, a 10% return for the entire year. And for that, I actually did 3 contracts. Now, this is a covered call. You can see I do mention covered call over here, meaning I own those shares. I own, I think, 300 shares of Intel. And Intel stayed pretty low. If you don't already have a stock, Intel's probably a good one to choose at this time. Again, it's 57, and I think I've been trading Intel for the last 9 or 10 months. This is probably my ninth or 10th trade I've done with Intel. And I think it started as low as mid 40s and it's gotten as high as mid 60s. And it stayed between 45 and 55 pretty much for those 10 months. So it hasn't gone crazy. Some of the stocks that I've dealt with have gone through the roof. There's some other videos that I've done and some other blog posts that where you can actually see those. So here with Intel, I already had that. I made that sale. It was on the 4th. Again, I maybe spent 10 minutes. It was probably a lot less than that because you can see some of my other videos on how when you actually do make the trade. It's relatively simple to do. It is a little confusing at first, getting used to buy to open, sell to close, and all the wording is a little confusing, but once you've done a few trades, you get used to it. And that's also why I suggest you only start with one trade, and in the next month, maybe you do 2 trades. So for this trade, I made 59 cents per option. So I did 3 contracts, so I made 100 $1.95, which is 195 total. Well, actually, that's the cost. The $1.95 is what I paid because it's 65 cents per contract, so $1.95 is what I paid, and then I made a total of $175 in premium. And this is just for this month, so I've only done 3 trades. And let's see how much the total is. So for the three trades, I made $610, averaging $200 per trade. So a fairly good amount per trade. And like I said, when I first started out, I was trying to get $100 per trade, but I'm not pushing you to do that same thing. I would, what feels right to you. You may say, well, I want to see if I can get 50. I'm so new to this, I don't know what I'm doing and don't want to take a chance. So you can see with those trades how the options work. And let's actually go back to the presentation. And let's go over to here what's next. So I do have a blog that goes along with this YouTube channel, and it talks about how I do my trading. It has actually every month I do a review of how I did that month. I haven't finished May's yet, but I did close to 3,000 for May, and I had a lot of margin left. And again, I didn't trade much. Maybe I spent 2 or 3 hours per week trading, and some of that was mainly because I needed to prepare for these videos and things. So not a whole lot of time to make some pretty good extra income. And then I've recently set up lessons. This is lesson 2, but I also have a lesson 1 that you can find on the Easy Investing Income blog. And then the one I just finished last week is the cash secured puts for monthly income, which they work a lot like covered calls, but from the reverse standpoint. I will sell cash secured puts on stocks that I want to purchase, and people will pay me premium. And usually, if you think about it, if you want to own, which let's use Intel again, if you want to own Intel at 50, you can sell not a covered call, but a cash secured put, make that premium, and if it gets to that point, then you'll be assigned those shares. So it's a way of actually purchasing shares but getting some money on the front end. I've done probably 60, 70 of these cash secured puts. None have been assigned, and I've actually, rethinking how I'm doing it, because since none have gotten assigned, there were some shares that I would have liked to own at these lower prices, at least back 6 or 7 months ago. Now everything's so expensive. But it's another good strategy, and you can find that on my blogs. And I have more lessons to come. I'm also going to do lessons on how to close and roll and deal with your trades, which is a big deal that I did not understand. I a lot of times just let things expire, which was wrong, majorly wrong. You can really manage these options. And then I do have a couple of other strategies that I use that are relatively safe. And again, I only want safe strategies. I'm not a risk taker. But this really augments my income. It's made me financially independent that I can do this and do other things that I enjoy versus having to work a full time job. And then also I wanted to mention that I'm going to do new YouTube videos and new blog posts every week. My goal is one a week. And the goal of the whole channel is to teach people how to do this and that you can do it. It's not outrageously risky. And I want to use this to actually teach my son. But being he's an 18-year-old, I don't want him doing this too quickly because there does feel like a little bit of gambling. It's not really gambling. In a way, buying stocks and selling stocks is also gambling, especially if you're not looking at value companies or companies you believe in. I like to buy companies that I actually buy stuff from and I believe in and that are important to me. So that being said, I hope you enjoyed this video. I hope you come back and please subscribe. Please like this video if you liked it, and please check out my blog. And I also have a Patreon page. If you want some hand holding, I can provide some hand holding, and I actually share my actual trades every month. So again, I hope you have a great day and thank you for tuning in. Goodbye.